Hey, deal makers, and welcome to the show where it's all about financial freedom with real estate. Let's do this. All right, deal makers, we've got something special lined up for you today. Several times a year, we actually bring out our group of mentors. These are the people who are full-time, who operates full-time syndication businesses and are actually helping other people do their first deal and scale their portfolios. And we bring them together several times a year to figure out what's working now because the market changes a lot. So what's happening right now, and how are people getting deals done? How are they getting deal flow? How are they raising capital? What is their market outlook? And we're going to tackle that on this episode today. Now, before we go down, we'll give a shout out to Keith Heckman. He's one of our students, and he did his first deal. He worked with one of his mentors, Philippe Schulligen, who's on this podcast as well. And he partnered with another student to close a 52-unit apartment complex in Charlotte, North Carolina, valued at $8.2 million. So congrats, Keith, on getting that done. So today, like I said, we're bringing our mentors together, and what's cool about it is these are all full-time syndicators. They run multi-million-dollar syndication business, and between them, they are GPs in over 6,000 units collectively and valued at nearly $600 million. And we have Barry Flavin, Brad Tasha, Jonathan Nichols, Paula Nichols, and Philippe Schulligen is our team of mentors. And we have the benefit actually of not only getting a benefit of what they're seeing today in their syndication business, but also they're working with dozens of students and to really find out what's going on in the market right now, what's working and what's not. Let's get right into the show. Hey everyone, and welcome to the show. It's really exciting to have you all here, our team of mentors. And the cool thing about this is not only do we get the benefit of your own syndication businesses, but also you work with literally dozens of students. So you have probably one of the best viewpoints of anybody of what's going on in the industry right now. So I want to cover everything with you, right? Because we want to know what's working now. How are people raising money? How are people getting deals done? And I want to start with you guys and just really talk about kind of the market, what's going on right now. A lot of things I hear a lot is, hey, is now a good time to get started, or should I maybe wait right now? What is your perspective? Barry, let's kick it off.
Yeah, no, I think it's a great time to get started. We all know it's been hard to find deals lately, but I think more importantly now than ever is to be building those relationships with the brokers. We're starting to see more deal flow come. And because of these challenges finding deals, I'm seeing a lot of people that were pursuing multifamily real estate, they're fading away. It's been tough out there. It's no secret. So I think more now than ever, build those relationships with the brokers, continue to analyze deals, build your team, build your network out. I think it's a great time to be in real estate and continue to pursue deals.
So why is it a good idea to build that relationship with brokers like now? Why is that important? Like why not wait until you do that? Why is that important?
Yeah, I always stress to people that if you're just another name on the email list, by the time you get that mass email saying, here's this 53 unit in Kansas City coming to market, if you're seeing that email, chances are thousands of people are seeing that email at the same time. Whereas if you've already built that relationship with the broker, you're having that conversation before that email even comes out. They're telling you what's in the pipeline. You're touching base with these people. And I always tell people, you can't build a relationship through email. You have to pick up the phone and call these people. You have to try and make an effort to go meet them in person, whether that's just something as simple as a coffee, even if it's a property that they're showing and they're doing tours and walkthroughs that day. Even if it's a property not for you, go look at it. Just at least make the face-to-face connection with these people.
Yeah, it's a good point to have start talking with brokers now, because here's the thing: is when you hear it in the news, it's already too late. Like I remember when interest rates started to rise, right? Inflation started to rise, and what happened is rents started to go up, but no one was talking about rents going up. So we had a deal like or we're doing due diligence. I can't remember. We're pursuing a deal, and we're doing rent comps on it. We noticed that the rents, our target rents in like year 4, that we're already getting right now, right? And
Yep.
so I think what you're saying is if you're not talking to brokers right now, you're not going to see the opportunity. By the time you read about it in the news, it's already too late.
Well, and I would also say that right now brokers are they have the time to talk to you. So 3 years ago, if you were just starting, it was really hard for you to become friends with these brokers because they had no time. They were closing deals left and right. And so they had no time for the beginners or the newbies. But now what you would find out is that even good, decent brokers who close deals, they have the time to meet you. And if you have the money to close a deal, you will most likely be able to find a deal. And so I think that right now, Barry mentioned how some people are exiting the market. This is a great opportunity because you may be the new blood in the street for these brokers to talk to and be able to develop that relationship. And so I am seeing more openness with the brokers even calling back those new investors and willing to have that relationship because ultimately they want to sell, right? And so if you are a buyer, it's a good opportunity to develop that relationship.
Now, let's talk about the market a little bit. Now, let's start with Philippe a little bit and going around a little bit. So one of the reasons that people might be exiting the multifamily is because there's blood in the streets and the market sucks, and it will continue to suck, and therefore there's no reason to be in the market. And Philippe, how do you feel about that? I mean, is that the case, or do you feel like there's some kind of opportunity?
Well, it's over the past few months, there's been a little bit of uncertainty. So, for sure, it's a little bit of a delicate situation, either as an owner or as a potential buyer. But, I think the the idea is probably like, be fearful when others are greedy and be greedy when others are fearful. So I think so it's a very good time now to look at buying. And I think, properties that are doing well, and I know there are a couple of properties we're going to put on the market soon, actually. And in both cases, there is an opportunity for value add. And from that standpoint, interest rates are, coming down a little bit. So, I think those are good opportunities that can be purchased from us, actually. So, I'm sure that there are a lot of owners who don't have to sell, but they want to sell because it's the right time, and you just need to find these owners. And meanwhile, for blood in the street per se, I think there are so many ways to work around that. Like from doing capital calls or getting pref equity to assist on keeping the deal afloat. The numbers that I've seen in the past, I think it's like 2 or 3% of the deals are maybe like really in the red and hitting the market actually, because even like prior to hit the market as at a heavy discount, the lender they will try to kind of sell it to other owners that they work with. So I wouldn't count on like a heavy discount, but the regular deals they're out there, and I think people should build the relationships with the brokers and continue to look for deals.
So, Jonathan, what about you? What is your outlook for multifamily? Are you buying right now, and if so, why?
Yeah, I'll say I have a couple thoughts on the last two comments. So, first of all, when it comes to getting to know the brokers, a year and a half ago when we were going into beginning of 24, I told Paula, hey, I have half a dozen broker friends that are like some of my best brokers that send me deals regularly. Send them all Christmas gifts. I don't care what you get them, just find something and send it. And lo and behold, we did deals with 2 out of 6 of them in the next year. Well, last year in 24, right? And just to give you some examples of like what we're seeing, we have a property we purchased last year in a sub-market where we had been looking for 3 years for a deal and had not found a deal. C plus, B minus assets in this market were trading 70s, even low 80s a door going back late 21, early 22. And we purchased an asset at 49 a door. Simply because it was 20 cent, it was 70% occupied, right? Not 40%, not 20%, not $3 million capex, just not running up to its optimal level. And so we were able to go in and get that enormous discount. Now, obviously, there's a lot of work. I think the challenges that you have to work through today as an investor is that there's just more hesitancy in the market. Lenders are going to scrutinize deals a little bit closer. Investors are going to scrutinize deals a little bit closer, probably like what they should have been doing all along. But if you can find a good deal that passes all those sniff tests, it's a great time to buy right now.
Why do you think it's a great time to buy? What is your longer term outlook on multifamily?
Yeah, I think that a lot of it, one thing that a lot of people weren't looking at a few years ago is basis going to the deals. What's your basis? So, already mentioned, buying our deal at 49 versus say 75 a door. It's really hard to lose when you're buying at a price that hasn't been seen in 6, 7 years in the market, right? Because we know one of the reasons we're in real estate, one of the reasons we like it is we know generally over time it goes up. And so if we see a dip in the market on pricing, it's safe to assume it will go up over time and we're getting it at a great price. And I think a lot of the reason why we're able to do that is twofold. One is just because of where debt is today. It's a little bit more expensive on debt, and so that forces the price to be lower. But the second thing that Paul alluded to is that, you know, a lot of those and Philippe is a lot of those newer investors from a few years ago are out of the market now. And so, you know, the competition is not as fierce on the buying end as what it was. And I would just echo what Paula said is that if you have the funds, if you do your sample deal package, if you find your JV partner and you have the funds to close a deal, you absolutely can find a deal in today's market. Like that is the limiting factor. And so you solve that problem, you're going to have a great time investing.
And regarding outlook for multifamily, I think the fundamentals stay the same, right? We are investing in housing and people need housing, you know, and so if your market is meeting those standards when it comes to population growth, when it comes to employment, you know, we currently live in Dallas, and so we did have an oversupply, but that oversupply is going to be ceasing coming up, you know, in the next year or so. And so I feel like as long as the fundamentals of real estate stay the same, I think why not take advantage of this basically phase in the cycle when, you know, basically things are on sale. So
yeah, there's continued housing demand. There's a housing shortage, and because of the cost of construction, that doesn't seem to go away anytime soon. So supply and demand would probably mean that the rents will go up over time. But Barry, before we move on to kind of deal flow, what is your outlook for market? Are you buying right now? If so, why? What are you seeing in the short to medium term?
Yeah, we're still buying, and a couple thoughts on that, just to piggyback on what those guys said, is it's now more affordable to rent versus buy significantly, right? So as owners, operators, very favorable for us. It's finally shifted back in our direction. We're always looking, we're always trying to buy. We're seeing a lot more deal flow pick up. And one of the things that we like going forward is we feel like as operators, we've weathered this storm of the unknown of what are expenses going to do. And with all the post-COVID inflationary pressures that we saw, we're now in the last year, we're seeing all that stuff stabilize for us. And we now feel comfortable going forward that if we underwrite something and I build in $1,200, $1,400, whatever my number is for, say, repairs and maintenance, I know going forward I can hit that number. I don't expect that number to continue to climb, even regardless of what happens in the market with tariffs and all that stuff. I think we're stable in that front going forward. We're seeing stronger occupancy numbers than we've seen the last couple of years. More demand from the tenants going forward. So we definitely like that aspect of it. And yeah, we're just nationwide, we're in a short supply of housing.
Yeah. Let's shift a little bit to maybe some success that your students have had and what's working right now. Maybe each of you can maybe talk about a student or so and talk about what kind of deal they've done and just very briefly how they found it, how they raised money for it, and how they got it closed. Just say something about the deal, and then I want to focus in more about how are people actually getting deal flow, how are they raising capital.
One of the most creative ways I've seen, well, not even creative, I've seen, again, you have to pick up the phone and call these brokers. If you just send them an email and say, hi, I'm Barry Flavin, I'm interested in multifamily properties, 50 units or more, and $5 million, great. You're just going on the email list. You're part of that mass email list. Pick up the phone, call these people in a very nice professional way, harass them and harass all of them. Go down the list. You always see the senior guy and then the next guy, and just go all the way down. And a lot of times you might have more luck hitting the more junior associate in the group, right? They're young, they're hungry, they're trying to build their database of potential buyers. And on the last topic, another good reason to get into this now is, as hard as it's been to find properties, a lot of these brokers, they've lost a lot of their go-to buyers. The qualified pool of buyers has dried up significantly. Capital has dried up. People are a lot more cautious. So a lot of people that used to be able to go out and raise $5 million without any hesitation, they might have done a bad deal. Their investors are not happy with them. They are not going to bring more capital to the table. So again, one more reason to get in, build those networks. Yeah. Oh, sorry. Second part of the question: who's having experience?
A case study. Talk about a case study.
Yeah, case study. I had some students that I worked with who've continued with the program, and they found a deal down in north of Houston, and they got creative and did some seller financing.
Can you talk more about it?
Oh, I mean, I guess what specifics do you want to know? I can talk all day about it if you want.
Well, let's talk about a deal. All you said is seller financing.
I know we're chasing multifamily deals here, but this actually turned out to be a self-storage deal. And
yeah, that's interesting because a good number of our students are doing other asset classes just in general.
And a lot of the same principles apply. So we weren't necessarily chasing self-storage deals, but this one came across their desk with a very motivated seller. And as they started to talk, they came up with some very creative terms on the seller financing side, and they looked at it and found it was a relatively newer build, and they had another big chunk of the property that just had cement foundation, and the previous owner was not leasing any of that space out. So they initially analyzed it as, hey, what if we build another indoor storage facility over here? And they found right out of the gates that, God, we don't even need to do that. We can just start parking all these RVs and boats and everything else there, and immediately are exceeding their projections on the returns.
Yeah. You're talking about Russ and Ryan?
Yes.
Yeah, Russ and Ryan. And this is a perfect example. First of all, there's several learning lessons out of that. One is the partnership itself.
Yep.
I think Ryan, is a capital raiser. I think Ryan's a capital raiser and Russ is more like the asset manager and deal finder, right? So I think in partnering, and we'll maybe talk about that later, these partnerships work very well because Ryan is very focused on raising capital. Yes,
Yep.
doing other things, and then Russ is really focused on the deal finding and then the asset management, right? And so those partnerships work really well. And as a result, because of that focus, Ryan was able to raise like $2.1 million. First time ever he'd raised money. And
Yep.
it was a local deal, whatever. So they could drive to it. It was relatively local. And so this is one of the reasons that it was so successful was that split in the partnership.
Yep. Yeah, they make a great team.
Yeah, they really do.
Yeah,
Philippe,
I'll give another example, a case study example, and this deal is currently under contract, so I don't want to talk too much or give too many details about it. But student I have a few of them with deals under contract right now. 40-unit deal, really solid market over on the East Coast. A couple of interesting things for people to learn from. First of all, some students, they get on the pods, the group calls and stuff, and all rah motivated, and that's great. I'm a little bit more like that when I chase deals. This guy's just really even kill. But you know what? He just shows up and does the work every week. Like that's it. Like nothing, not gonna, nothing showy or anything like that, but just shows up, calls the brokers like Barry was saying, does his underwriting, puts in the offers, and then when one gets rejected or goes on, he just goes to the next one. So first lesson learned. Anyways, he locked up a 40-ish unit deal under contract, great market, 1990s product. How many new students were buying 90s deals 2 and 3 years ago? No one. I mean, I'm just going to tell you, I was not buying a lot of, that was not the normal thing, but you can do that now. Mom and pop owners for many years, a lot of value add opportunity, great basis, going to be able to put a good debt product on the property, reasonable size capital raise that I'm sure he and his partners will be able to complete. Just if you're willing to show up and do the work and, when everyone else is running one way, you're running the other way, you can accomplish a lot right now. And I think that's kind of the big takeaway that I've seen.
Yeah, absolutely. Once you get up to speed on everything you need to learn about multifamily syndication and put your team together and blah, 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 which takes about, 30, 60 days, the whole thing becomes what I call a little boring, right? Because all you're doing is you're making offers and talking to investors. And the people who are successful, they stick with it. Like you're talking about your student. And I like to say, we have 100% success rate with our people who stick with it. The only reason we don't is people simply stop working the system, and because it's maybe for them it's taking too long or whatever. And that's really where you guys come in, because I think one of the reasons we're so successful is that we keep people going. We say, look, you're really, really close. You just got to keep doing this one activity. And I think a lot of times we don't actually see some of the successes and progress we make because we're so focused on getting the first deal done, and we don't recognize all the milestones up to that point, right?
Yeah.
So how are you keeping some of your students on track and motivated to kind of stick with it?
Yeah, I'll go real brief since I just mentioned this student, but just to highlight, we have deal trackers that every student's required to fill out between each weekly meeting that we have with their group, right? And that's really the scoreboard for like, are you progressing or are you not? In other words, we're looking at leading indicators, not lagging indicators. Success for that week is not, did you get a deal or did you get a contract? It's, did you do the activities you're supposed to be doing? So I think that's one big thing is, looking at those leading indicators each week, having the accountability of a group around you, and then finally having someone who's experienced, like one of us mentors that looks over your shoulder. Because the big thing that we all do as humans is we second guess ourselves. Am I looking in the right market? Am I offering too much? Am I offering too little? And if you have someone experienced that says, go here, don't do this, do more of this, that helps you to make decisions quicker, which ultimately gets you your goal that much faster.
Yeah, it's a good point, because if you were in a vacuum, you're not sure you're doing it right, right? So you're not sure if you should continue in this direction or maybe pivot this direction. And I think that's one benefit of working with one of you guys and gals is you can get kind of assurances of when to stick with it and maybe when to pivot. So that's a really, and that accountability piece is huge. Philippe, maybe a story from a case study from your end.
Yeah, absolutely. And actually, it's kind of along the same lines from what was just discussed. I think it's important for the students to work the system and stay engaged, for the reasons that we mentioned, talk to brokers and so on. And I have a good example I can think of right now with students Eric and Josh, and they've been very diligent and reaching out, and they've been actually invited to bid on off-market deals. And very recently, they had an opportunity also. It's kind of it wasn't exactly like the multifamily per se, but it was a portfolio of single family, which were like really close one from another. So, I guess very similar to multifamily. And we took a look together and tweaked the syndicated deal analyzer to make the appropriate adjustments together. And they went through the bidding process and LOI, and LOI was accepted. So he was on a great path, but and each step of the way, I was there to assist them, right? It's like, they were a little bit nervous. It's their first deal and so on. So we we made sure that every boxes was checked. And during the due diligence, they realized the offering memorandum from the broker was talking about I believe it was 21 units, but in reality there were only 18 units. So they're like, wait a minute, it's like we didn't underwrite the deal with the what was we were told. So that there was material change on the deal from that standpoint. So they tried to continue to work on the deal, and they were also working on seller financing, but eventually, in order for the seller to accept the new terms, he wanted to have all the earnest money deposit go out day one, like without finishing all the due diligence. And what I told them, I said, look, you had a bad surprise already in the early stage of the due diligence. It's probably not safe to put, give them all the money right now. Maybe you can make a gesture, and because they were changing the terms, etc. Give them a little more than what you had at that point, but don't give the whole amount. That's a little bit silly. And sure enough, and also like they were. What I found very interesting, because I know for my first deal I was very like emotionally attached to it, but Eric and Josh, they were like very cool-headed, and they said, look, we're not married to the deal. If they don't want to do it, we're just out. And eventually, I saw an email, it was last week, and they got out of the deal because the seller didn't want to budge. And I think it was a good decision, because who knows what they would have discovered through that due diligence.
See, that's another good point. Another great value of working with one of you mentors is the discipline to walk away from a deal, and this really prevents making big mistakes. Like we're all going to make little mistakes, and that's fine. We learn from them. We just want to avoid the really big mistakes, right? So when you're basically paying for 21, you only get 18. That's a pretty big mistake. I think Jennifer was another student. We had a call with her yesterday, and she had this light industrial triple net thingamajig under contract, did phase one environmental on it, and it kind of passed. And then somehow, I don't know how, they discovered there was a $10,000 gallon tank buried somewhere. And they're like, "Hey, look at this tank." And the seller was like, "Yeah, so, let's go." And so she apparently told me yesterday they walked away from the deal. And so I don't know if she's working with one of you guys. I just had this call with her yesterday. Is she working with you guys?
He recently just started working with me. So
Yeah.
you know.
Yeah, exactly. It takes a lot of discipline to do that. And these things all turn out well, right? Because she was a little sad in a way, but then it opened the door for her 40 unit ground up development project, which she was really lit up about, right? Now she's got rid of this thing, and now she gets to work on this 40 unit development project she's always wanted to work on. But it takes a lot of discipline to walk away from a deal, and then most importantly, to stick with it. I remember years ago, there was it wasn't one of my students, but he got into a deal. It was in Oklahoma City, and we actually back in the day, we actually went out there and looked at it, and it was awful. It was like ghetto. I'm like, dude, we're going to partner with a student. We're not going to do this deal. And he got very sad, as he should. But then what he did is he quit. And he didn't realize all the progress he made. He got it to the point where the broker took him seriously, allowed him to put it under contract and do all these things. And he kind of went back to whatever he was doing, like wholesaling or flip, I don't know, whatever it was. And this is what I'm saying is we don't really recognize, even if a deal goes away, Philippe, like in your case, the amount of progress that someone has made to get to that point is staggering. And so now getting another deal to that same finish line is going to be much, much easier than before.
Yeah, you always hear everybody say, take this massive action. You got to do this huge, great thing. And if you continue to just take all those small steps, continue to show up every day and just do a little bit of work every day, then you look back 6 months from now and add all that up, that's a massive action. If you can do that every day, just continue to show up, analyze deals. And like Jonathan said, we track not just how many deals are we underwriting, how many offers we write. I'm always preaching to everybody, write an offer on it. Like, oh, well, they want 6 and I'm at 4. Write an offer on it. You don't know where their head's at. You don't know what their position is and why they're selling. Do they have to sell? You don't know. So write an offer. Start the conversation. They don't know to counter you if you don't make them an initial offer. So I always say write off.
Also, what happens when you lose a deal? Like, how often does that deal come back to you?
Oh, I have so many deals that I own today, and I have other students in the past where they've written an offer and a month goes by or 2 months goes by, and they're like, yeah, they do want to talk to you about that price now. Or they took that higher offer because they were so focused just on price, and then turns out they can't get the financing across the finish line, or they finally started to peel back the layers and found all these issues. I just recently had a group of students that they had a nice deal in their contract in Pittsburgh. And as we started to get into due diligence, it got real ugly real quick. All the financials that we were pitched and sold initially, that was not the case at all. You get into huge collection issues, vacancies, people not paying, people that needed to be evicted. It was essentially half the building, day one, needed a full turnover and a lot of time and money. And it's just not what was initially presented. So again, why it makes sense to work with some people and have a team double check all the things.
That would have been a big mistake. You get into a building and discover that, in fact, only half the NOI is there. That would be a massive problem. So, yeah, nice job catching that.
A financial disaster right out of the gates, but it would have been very, very hard to recover from.
It would have been hard to discover from. Let's talk about 2 major issues I think that students really have, especially perceived and sometimes actual, is deal flow and capital raising. We talked already a little bit on deal flow, and if I remember, 2 things for me was, to get deal flow, you got to be talking to brokers. You're not going to find properties on the MLS or LoopNet or some other website. You got to talk to brokers about that. And then number 2, what I heard is consistency and And in our case, we're filling out a scorecard called a deal tracker where they have to report back every single week where how many deals did they get, how many did they underwrite, how many offers did they make, right? It's that leading indicator, Jonathan, that you were saying is very important. I think those are two critical components of deal flow. Anything else that you want to add to getting deal flow? Silence. And that's probably because it's so simple.
The main thing is, staying
I think
relevant.
it's just that easy. I mean, it's that simple, not easy, but simple.
Not even simple, yeah.
Yeah, that's your answer.
So let's talk about, okay, well, let's talk about brokers then. Okay, so we got to talk about the consistency and showing up every single day. And I for me, massive action is stupid. No one takes massive action. Like maybe 1% of the world's civilization takes massive action. I always call it taking tiny action, a little bit of action every single day. So if brokers are the gateway to deals, how should one approach brokers? Give me some tips about how do you build relationships faster so you get access to off-market deals. What are some tips that you see working?
Continue
What I like to
Everybody's gotten sent in there. Awesome. Philippe, go first.
yeah, what I like to suggest, and which I mean that's what I'm doing myself. I always say to students, look, understand the psychology of the broker. You know why they're there, why they're picking up the phone or answering you via email. They're doing that because at the end of the day they want to sell properties. So one of the KPI, the key indicators for them, is how many showings. So if you like a deal, go and meet a broker at the deal, tour the deal together, start to build the relationship. Offer to buy them coffee or lunch or whatever, and start working on that relationship. That would be my number one tip.
But a lot of times we're buying outside the market, so you'd have to fly there.
It's
you get on a
important.
line, broker takes you real serious, real quick.
Yeah, there you go.
Yeah.
Man, plane ticket costs you $300, $400, $500. Get a hotel room for the night. Insignificant cost when it comes to how much wealth you can generate in this business.
Yeah,
Yeah,
it's going to make more more of an impact if you do come from out of state. Absolutely, yeah.
Okay. What else? That sets you apart from their giant email list. You hopping on a plane going out there, you're like in the top 5% of their buyers probably, or even higher.
And we all write offers on all these deals and they go by. I encourage people to go follow up on that deal that you never got. You didn't get the deal, but call them back just as another talking point. Find as many touch points as you can possibly come up with, and follow up to say, hey, whatever happened to 1234 Main Street? What did that end up selling for? Did it close? Do you have any issues? And then naturally, I always try to finish it up with, hey, what's in the pipeline? What do you guys got coming? I'm still buying. I've got my investors lined up. I'm ready to go. We can keep reassuring them that you are a qualified buyer. You're ready to go. You're still eagerly looking for good deals.
So how frequently are you touching base with the broker, and the reason for contacting was about a previous deal or a current deal they sent, or maybe what's coming up? So how frequently, and is there any other reason you can fabricate to stay in touch with them if you have to?
Oh yeah, I can make up a million reasons. It's simply if I know their office is in this city or suburb, and even if I'm not over there, just lie and say, hey, John, I'm going to be in your area tomorrow at noon. Can I buy you lunch? Oh, great. Yeah. Just little things like that. I don't know.
Yeah. Well, it's a pretty big thing, but I think it's very effective in accelerating that relationship. Jonathan and Paula, any other tips you have in building relationship with brokers?
Yeah, well, I would say, and I'm not very big on social media, but Jonathan is, and this kind of caught my attention on my last meeting with with one of the brokers here in DFW. It's that he mentioned, oh, Jonathan, I saw that you guys went to blah, blah, blah on Facebook or LinkedIn. I don't remember exactly where. But I think that social media has this passive power of continuing to feed relationships. And it's a really natural way for you to like their picture with their family in Bahamas. And then they seeing that Jonathan just finished an Ironman and things like that. Like, I think it creates this almost organic, yet a little bit, just kind of touch points that you don't, it's happening organically in the background, outside of the daily calls and things like that. And so if obviously after you've met them in person and they seem to be very active on social media, I think it's natural for you to befriend them in those platforms, and they start seeing your face and they start seeing, oh wow, they're active, they're learning, they're looking at apartments. They have a family, they are people with passions and things that they enjoy doing, and they like golf, I like golf, and so I think that social media plays a little bit of that. I'm not going to say base it 100% on that, but I do think that it might be like that 10% or 5% that can create an edge on your relationship with the broker too.
Yeah, I
That's
think what I say, we always say people do business with those that they know, like, and trust, right? And so a lot of the comments that we've been circulating are around knowing someone, getting to know them. If they like you, they're more likely to do business with you. So Paula, she does a monthly meetup with a local broker we're friends with in Dallas. Like every month they coordinate this together and do a meetup together. And obviously they have two different clients they're looking for, two different sets of interests, but she's a good friend of ours, right? Another example, a broker that we bought our deal from in Lubbock last year. We're in Lubbock touring the deal. Hey man, let's go to happy hour and drink beer for a couple hours and hang out, And I bring along another investing friend who wants to buy from him and a contractor who's a mutual friend. And we just hang out for 2 hours, right? They're more likely to send me deals in the future. Like that's a fact. And then the trust piece. And I think that's probably where the mentorship program comes in the most, is being able to demonstrate that you're competent in the industry, right? Everyone wants to do business with the cool people, but brokers also want to do business with people that can get the deal done, that they know their numbers, they know their underwriting, they have their property manager lined up, they have their contractor lined up, they have their lender lined up, they know their numbers, and they can close. And if you can demonstrate that to them, that's going to go the furthest in putting your offer at the front of the list.
You bring up a good team. One of the things that we always teach right up front, we call it being deal ready, is to have your team built. And I think you're right. I think the value of working with one of you and being able to list your name on their cover letter about being a part of their team, that shows a lot of strength. And the advantage of that is that the student who doesn't have any apartment investing track record all of a sudden now can borrow yours, right? That's got to make a huge difference when they're talking to brokers and investors.
huge.
Yeah.
That's how I got my business partner. Still to this day, he mentored me through the process from the get-go, and I leveraged his experience and expedited the growth curve for myself. It's huge.
Yeah.
Wouldn't be able to do it if I didn't go down that path.
Now, speaking of track record, I mean, obviously the other piece of the syndication is capital finding. And I would say close to 100% of our students have never raised capital before. And somehow, Scott Todd raises 800,000, Jennifer raises, I don't know what, 4 million, and Ryan and Russ are raising, 2.1 million. How in the world can someone do that within 6 to 12 months? Like what are they doing to raise capital? And you can, by the way, talk about joint ventures too, right? Because, if you're a deal fund, you're like, well, I don't think I can raise $2.1 million. But Ryan's not a deal finder. Ryan is a capital raiser. Scott Todd, we thought he might be a deal finder, and it turns out he's more of a capital raiser, right? So maybe talk about the dual roles.
Yeah, I mean, I think there's like two key things. One, the biggest challenge that I see new students is the change of identity, right? They're thinking that they're asking for money or asking for a favor, instead, and they are either engineers or accountants. They have a different identity, and now they're coming into becoming a multifamily syndicator, and they don't know how to really embrace something that they have not yet fully done. And so I think that was something that when I started, I had to really believe that I'm a management consultant, but I'm also a multifamily syndicator, and this is my business and this is what I'm doing, and I'm providing something of great value to investors. And I feel like that change of identity is like the biggest hurdle I see people having to overcome in order for them to be able to change that mindset. And whenever they're talking to people, they can feel confident of like, you are creating value, you are investing in your education, because one of the reasons why we originally, joined the program was because we were going to be taking other people's money, and we didn't want to do that by ourselves. We wanted to make sure that we had the guidance, we had someone looking over our shoulder and in a way guiding us through this process to ensure that we're not going to lose people's money. And so that is number one. And I think number two, it's really understanding that this is not a solo game. If you want to go buy a 10-unit apartment, maybe, if you have the capital by yourself, but understanding that this is a team sport, and you alluded to that with the JV, I really do think that finding the right partners, to help you raise the capital. If you have to raise, $3 million, you may not be able to raise, 3 million by yourself, but you may be able to have other partners that come along and have the same passion for the same product or market. And they're looking for the same kind of thing. And maybe you find a deal and they don't. And so I think finding those partnerships, which I think the Michael Blank program allows for those organic connections to happen, but you do also have to be very intentional and be able to create value in a partnership. And that value creation probably will start with being able to raise capital, And so that's just something I usually chat with my students.
Yeah. Some advice for raising capital. And let's talk specifically, what's your advice for deal finders to raise capital, and what's your advice for capital raisers to raise capital? Because they're two different roles, right? The deal finders typically, like you said, they're more like an engineering type, numbers oriented. They tend to gravitate more towards the deal finding because it's a more number oriented thing, and they kind of resist the whole idea of capital raising. Now, should they learn how to raise capital? Yes, they should, but oftentimes they struggle with it for that reason. The capital raiser has the opposite problem. They kind of resist underwriting and talking to brokers because it's very numbers oriented, very detail oriented. They don't like that at all. And so they're much more relationship people. They tend to gravitate more towards the capital raising side. So what's your advice to each one of them? Philippe, you want to take that? Like, what do you advise your deal finders to do, and what do you advise your capital raisers to do?
Sure. Yeah, I think so. Number one, I would say try to identify what you like to do. Because I know in my case, I was trying to do both. It's not easy. Like just to do one of the two is hard enough. But when you try to do both at the same time, it's challenging. Though you have to learn both eventually. So either you try to do in parallel or you do one by one. But in any case, I think the advice for both is really very, very similar. You want to position yourself as, a thought leader, like, we say like in social media. So maybe you're in the engineering industry, like, I was at some point, but I was not in the real estate industry. So I had to show that I knew what I was talking about and that I was taking the right steps to learn about this, such as, getting knowledge through a program like yours, Michael, and then, show to people what I was doing. I went to take a look at a deal, like look at these pictures, and I'm underwriting a deal, and those are the results, and I made an offer to a deal. Like show step by step, and now you build confidence from others into you because you're showing them what you're doing and it makes sense. At the same time, you can take the opportunity to maybe educate them a little bit about these things and say, look, this is why I'm looking at multifamily, right? It's like a primary need. Everybody needs a house. Like even in a down cycle, the people are not going to start living on the street. This is like they have to do that. They will cancel vacations and going out to restaurants before they don't have a roof above their head. So, but those are the things to think about when you talk to potential investors, and at the same time, another thing comes to mind actually. If you're like me and you're not like a big social person necessarily, like it's like you see going to a party or a meetup as a drag rather than a good time. Usually when I come back, I always feel I have a good time, but when I go there, it's like it's like I don't want to talk to other people and so on. But so don't force yourself, right? Like maybe you meet 2 or 3 people and spend significant quality time with them, and then when you're done, it's like your energy is low, like you just leave, and don't force yourself to stay like 3 hours. That's another suggestion for people who are more on the underwriting side, maybe.
Yeah, as long as you keep showing up, like we keep talking about. Barry, what do you advise your students? How are they raising money?
Yeah, again, consistency is key. Stay in touch with your investors, and if they're not investors yet, everybody that you know in your network. Continue, like Philippe mentioned, like even if you don't have a deal or a contract, keep showing people, whether it's via social media, LinkedIn, Instagram, Facebook, or a newsletter. Let them know that, hey, we're out here touring deals, we're underwriting things. Here's why they didn't meet our criteria for trying to put this under contract at this price, because we're looking for these types of returns for our investors. And just find any opportunity you can to just get yourself in a bigger, better room of people that are going to be in a position to passively invest with you. And it doesn't need to be specifically a real estate room. It could be pick your passion. If it's golf, go that route. If it's cars, there's a million car shows and activities around all those types of things that you can get. Horses, I mean, you name it. There's so many different things. Just get out there. If capital raising is your passion and something that gets you excited about, which it is for me, yes, I underwrite and do all the asset management type things, but what really gets me excited and drives me on a day-to-day basis, like, all right, we got an event, we're going to go connect with people that we've already have worked with and we know, and at the same time, we're going to try and continue to expand the network and go meet some new people at the same time.
So when you go out there and meet new people, do you have some kind of approach to people? Like, do you have like a process when you first meet someone? What is that? What is that process all the way from when you first meet them until they maybe weeks, months later invest with you? What does that look like?
Yeah, honestly, it's a case by case basis for myself, a little bit more organically, kind of one of those a little bit more old school. Like, hey, read your audience, read the room. If you come right out of the gates and you can just kind of smell it, right? You don't want to be the used car salesman. When you can just feel that somebody can't wait for the conversation to turn to them and well, hey, in case you didn't ask, but I'm looking for more investment. I have this money, all right? I need this much money, right? You're going to have very little success rate with that. Back to the know, like, and trust concept. Just get to know people. Be a genuine person. People are going to connect more with that than anything. And naturally, the conversation will turn to, hey, Michael, what do you do? How many kids? What do you do? What line of work are you in? And then use that as an opportunity to talk about what you do and how you present great real estate investment opportunities to people that want to invest passively.
Right. Yeah, exactly right.
And it
John,
might be, and then
yeah.
you might have a deeper conversation about your second and third meetup, right?
Yes, I think what I'm hearing from you is the first impression. Just keep it positive. There should be no agenda. Just have a positive impression. So when you follow up with that person, they're like, "Oh, I remember Barry. He's a good guy," and he'll take the call. And then you can maybe advance whatever agenda you have at least
Yeah.
the second call. Yeah, that's good advice, because you get a conference all the time and people shove their business card in your face and going, "I'm selling this," and I'm like,
Yeah.
"Right, okay, not to me."
Get an idea for what they're interested in.
Yeah.
You might meet somebody and say, "Oh, I love that you do that. I'm already passively invested in 2 other deals out of state. I'd love to hear what you have to say." Or somebody might, yeah, you know what? I got burned on a couple of those opportunities. Not for me. Probably not your best audience right away.
Jonathan, I haven't heard from you yet. What's working for students?
A couple of things, a little bit of different twist. One thing that we like to teach kind of in our group is that you start with your friends, your family, your professional contacts when you're looking for investors, right? And the reason behind that is, like Paula was alluding, you're going through an identity change. And the thing with that group of people is that you already have trust with them. They already know you. So even though they may not know Jonathan, the real estate investor, they know Jonathan, the family member, they know Jonathan, the engineer, or whatever context they know you in, and they trust you through those things that they've seen. And so they're like, well, Jonathan was a great engineer. He probably can do well at real estate. I'm interested in real estate. Let's have a conversation, right? So start out with that group of people that are already in your network. When you're going to expand, I really encourage people to think about who your avatar is. And really all that is just an introspective look is, who are you? So for me, I used to work as an engineer, kind of like Philippe was saying. I'm a little less social. I don't enjoy going to big, loud meetups. That's an out of my comfort zone thing initially. Whereas like Paul is my wing lady if I go.
I am the wingman, you guys.
She's the wing lady. But going by myself, I can do it, but it's not my cup of tea. You know what I can do really well? I can get people who are engineers, analytical, technology people. If I get on a one-on-one conversation, I can explain every number, every detail, every pro and every con. Engineers want to know about the risks, what's going wrong, what are you doing to mitigate it? I can explain that inside, outside, all day long as they want to talk. And that's helped me to really build a lot of trust with investors that fit my avatar, who then later go and invest in my deals.
And
Yeah.
for me, like what I realized too is that not everyone wants to know the details. And I tell this to my students because I raise more capital just organically through, if you show up to work and they tell you, what did you do this weekend? Well, I tell you what I did this weekend. I work with my husband in real estate, and it wouldn't be, I wasn't trying to fabricate that. It was very organic. The passion for real estate was something that I just shared, or people knew that I'm leaving early because of this, or last night I was at a happy hour for real estate, or I took these classes or whatever. I start my coworkers, my family, my friends, they start kind of seeing and hearing this organically, not because I was trying to be like, oh, you're gonna invest with me. I would say that people that sometimes you least think will invest with you will end up being the ones that invest with you. So don't judge the book by its cover. I think that sometimes students may be hesitant of like, oh, that person wouldn't invest with me. You don't know, so share about your passion. If they ask, what do you do for a living, or what did you do last weekend, or whatever, like it's normal for you to share. I did this. I'm working on this goal. I'm excited about this. And people feel that excitement. You can communicate and translate that through how you position yourself. And I would say for a lot of the people that I raised capital from and my peers, they didn't want to sit down through a presentation and a spreadsheet. They're just like, cool, I like you. I think you work extremely hard. This sounds, great. They have MBAs, they know math, and they can look at a deck and be like, yeah, I believe in this, and they invest, and so it's different. People see different things on deals. Obviously, you want to make sure that they are educated and sophisticated, but some people don't care to know all the details and sit down through presentations. And so just know who your persona and your target market is.
Yeah, know who your persona is, and then you attract a certain person, Jonathan, for example, or Paula, and then you repel a certain one, right? So you guys are actually complementary because you would probably attract and repel to two different people. But who are you, and who do you resonate with, right? It would be kind of natural for you, Jonathan, to have this woo-woo conversation about this, with someone who doesn't care about numbers. You're like, God, I think you should do more diligence on this, and you want to drown it, you know. And some people need that and some people don't. So be very clear about who you are. And I think what the theme I heard from you is you're not raising money. You are sharing your enthusiasm, Paula. I think I heard you say that. You are, and then I heard all you say, you're educating people. You're actually providing value. So you're not begging them, you're not manipulating or selling them on anything. And so I think a lot of people have this misconception that I need to really get good at sales, when really you're actually just you're sharing your enthusiasm, you're educating people about how to invest passively in real estate, which most people don't know it's even possible. And I think that's a really big difference. I think
we're bringing them opportunities that they cannot go buy themselves.
That's correct. Yeah, they could not own a sliver of like $20 million.
Not let them buy it themselves. So by teaming up with us, we're presenting them an opportunity they would not have access to otherwise.
The only alternative is, of course, staying in the stock market, which a lot of people are. But the other alternative in real estate is simply to do it yourself. And a lot of people try to do it themselves. They buy a rental or they start flipping houses, and then they realize it's a lot of work. And at the end of the day, they don't really make a lot of money, and it's a lot of work. And so they scratch their head going, how in the world can I get into real estate without all this work and all this headache? And the answer is, well, shoot, invest with me, because I already have the team. I'm investing in building a team. It's hard to do. Let me do the hard work, and then you can basically just invest with me.
One of the things I tell some of our investors, whether you're a doctor, a lawyer, or whatever your entrepreneurial spirit is in your line of work, keep doing what you're doing that was successful for you in the first place and allowed you to make a lot of money. And if you want to be in real estate, passively invest that with us. Don't go recreate the wheel and try to do it yourself.
I want to talk to you as we wind things down. I want to talk about working with an experienced person like you guys versus doing it yourself. Because I see this all the time. People, I see two kinds of people. One, they want to get into multifamily, but they just don't believe it's possible, right? It's too complicated. They have a lot of limiting beliefs around getting. But then I see the other kind of person who basically just tries to do it themselves. And I was one of those people. I did it myself. And as a result, it took a long time. I made a lot of mistakes, and I just was unable to scale very, very much in the beginning. But if you look online about all these things about, hey, should I get a mentor of some sort? And there's pretty much a mixed bag. But a lot of people have the mindset, no, you don't need to work with someone experienced, especially if it costs money. And I think in a lot of cases that's true. But the question is, why should someone invest in themselves to work with one of you guys, or even align yourself with a very experienced person? What difference does it make? And who is that for, and maybe who is it not for?
Yeah, I'll take that one. So, I think that one of the most important things is that you're going into this with the mindset that like you're doing the work on this, right? When you join a mentorship program, when you join our mentorship program, we're not handing you a deal. We're not handing you the money. We're here to guide you and help you along the way. And so I think it's a great fit for someone who's motivated. They're committed to the outcome, no matter how long it takes. They're willing to put in the effort, and they want someone that's going to help them, right? To help them avoid those train wrecks, to help them to make decisions more quickly and clearly that let them get to the goal faster and avoid a lot of the mistakes that many of us have made and we're openly willing to share with them. And so if that fits someone that's listening to this, it's probably a great fit, right? Whereas if it's someone who they think it's just going to happen, it's probably not a great fit. That'd be kind of my quick summary.
Yeah, my point of view, I think the more I age, the more I realize the value of mentors. And even now, it's like, I'm a mentor on some sides of what I can teach others, but at the same time, I still have other mentors, whether it's formal or informal, because relationships I built in the past, and it's so valuable, it's like bouncing ideas to with more experienced people, to avoid mistakes. I mean, that's it. But I think the key for the success when you use a mentor, you need to understand that, and you need to be ready, because actually it was I remember in the Dealmaker Mastermind, the community of your students, Michael, somebody posted something recently, and he was talking about that he was all in, right? And he decided, and he did that and that, and this, he said like, oh, now I'm all in. I'm going to do this very seriously, and so on. And I think that it's what we spoke about like during this session, this podcast, is really like, in order to be successful, you have to be all in, right? I mean, and it's hard. People have W-2s, they're doing that in the evening on the lunch break or whatever. But if you don't go all in 100%, and then do all the things that are required, talk to the brokers, talk to the investors and so on, and then really come prepared to the meetings with us, the mentors. Come with your questions, and you have to think about that like almost 24/7, right? It has to be in the back of your mind, and you have ideas coming up. So, oh, what about this? What about that? Then bring all the questions. We can talk about that during our sessions. But it's if you don't have that mindset to be all in, it's not going to work. You cannot come and it's a like Jonathan said, we're not going to fish the fish for you. We're teaching you how to fish.
Barry, any
Yeah.
thoughts from you? Oh, John, Paula.
Yeah, no, all great points. Trying to think why. I mean, you touched on Philippe, having somebody to bounce ideas off of. Just, hey, what do you think about this? Right? Double check your work. And one of the biggest things I honestly think is being able to share the mistakes that we've made. We've made plenty of mistakes when it comes to underwriting, how we operate something, how we position some, how we approached renovating a property. Little things like we implemented rubs in one of our buildings, and it was a very price sensitive tenant base, and we created not a financial disaster for ourselves, but it was a challenge for many years because every unit that turned over required a full gut rehab. So when we implemented rubs, we created a monster wave of turnover for ourselves and the cash outlay that had to happen because of that. So you tell me, like, little things like that. Be sensitive when you start to implement different programs when it comes to operating a property and how you approach things. And
I think to me, the value of mentorship is onefold. One is to avoid the big mistakes. I think we talked about that. And the other one to me is scale faster. And I'm a little bit like Philippe. I have come 180 on this topic of mentorship because my first deal, I did not have a mentor and a lot of things went wrong, but it also was a 12-unit deal. Like the average student for us is a GP, and the average size is a $4 million deal requiring a $1.5 million raise. And it's because when no one comes in going, I'm going to do a $4 million deal. Well, maybe a few, but most of them are like, maybe I'll do, $1 million deal or whatever. And that's the end of their comfort zone. And then somehow they end up doing a $4 million deal. And if I look back, had I had someone more experienced, they would have said, hey, come on, Michael, you can probably do a little bigger than 12 units. And here's how you do it, right? Here's all these things I never thought about. So now in my business advisory, right, if I'm paying $70,000 a year for someone to advise me in business, and I'm happy to do it as long as I think I can get a 10x return on it. If I want to get a $700,000 return on that business relationship. So Philippe, back to you. When I have that call, and I have like 4 calls a month, every single call is a $2,000 call, right? So if I get there and I was like, hey, dude, what are we gonna do today? I'm just blowing $2,000 away, right? So every time I will spend at least an hour preparing for that meeting because it's a $2,000 meeting. If I'm not getting $2,000 worth of value out of that meeting, why am I even here? And I see the students who are successful, that's what they're doing. They're doing the work, they're filling out their tracker, and they're debriefing on things that they're challenged with, right? And so now this is how, in other words, mentorship for me is there so I can scale faster and avoid the big mistakes. If I want to make mistakes, I don't need a mentor. If I don't want to scale faster, I don't need a mentor either. So to me, in my own experience and in my students, that's probably the biggest value add. So those are my thoughts on that. So I just want to wrap things up. So just go around. How can people connect with you? Obviously, the way to connect with you for mentoring is themichaelblanc.com/mentor. You can actually book a call with us, and then and we can talk to you about getting into mentorship, what that entails, and then you can even request to work with one of these mentors if you want by name. So themichaelblanc.com/mentor is the way to go. But each of you also have ongoing syndication operations, and so Philippe, how can people connect with you?
Yeah, so people can go to our website. It's boostmycapital.com/contact. There will be a form for them to fill, and we'll be in touch.
Barry, how about you?
Easy. Email's the best. Barry@newmissioncapital.com.
Awesome. How about Jonathan Paula?
Yeah, you can fill out our contact form on our website, which is Apogee MFC, like multifamilycapital.com, or I'm very active on LinkedIn. You can find me there, Jonathan Nichols.
All right, Apogee is APOGEE. So again, these are ongoing operations. If you're looking for possible ways to invest and engage with those, check them out, connect with them as well. So I want to thank all of you guys here for being on the show and sharing your huge collective experience.
Thanks,
Thanks,
Michael.